Have you ever wondered how the entire world can just break? How this massive economic machine, built over centuries, can suddenly grind to a halt and wipe out the savings of millions of people? Well, it happened. And the craziest part? It all started with a really simple idea. A lie, really, that almost everyone believed was true. Okay, let's get into it. The whole thing really comes to a head on one single day, September 15th, 2008, a Monday. You're going to want to remember that date. It's the day the floor just fell out from under the entire global economy. On that one Monday, Lehman Brothers, one of the oldest, most powerful investment banks in America, just vanished. It lost $600 billion. I mean, not over a year or a month, overnight. It was the biggest bankruptcy in US history. Just poof. And we're not just talking about numbers on a screen here. This was real. These were people who thought they had a job for life, suddenly without one, carrying their entire careers out in a cardboard box. The shockwave from this one event would go on to cripple the world. So, how? How did we get here? How did it all go so spectacularly wrong? Well, it all started with a lie. A belief so powerful and so widespread that almost nobody even thought to question it. It felt less like an opinion and, more like a law of physics. And here it is. This is the single sentence that broke the world. Housing prices always go up. That's it. That was the core belief. And when you say something enough times, people start to believe it's true. And everyone believed it. I mean, it was wrapped up in the American dream. Banks were selling it like a guaranteed path to getting rich. And for the banks, the logic was simple. Even if somebody can't pay their mortgage, who cares? We'll just take the house and sell it for an even bigger profit. What could possibly go wrong? So, everybody's on board. But look, a belief, even a really powerful one, doesn't create a global catastrophe on its own. For that, you need to pour some gasoline on the fire. You need rocket fuel. And in the early 2000s, the entire financial system started dousing this simple belief with jet fuel in the form of cheap, easy money. So here's how it went down. After the dot-com bubble burst and 9/11 happened, the US economy was pretty shaky. So, to get things moving again, the Federal Reserve cut interest rates down to almost nothing, just 1%. Now, what does that actually mean for you and me? It means getting a loan to buy something big like a house became incredibly cheap. The monthly payments were lower than ever. And when money is practically free, people rush out to buy stuff. And the biggest thing they rush to buy? Houses. This created a huge buying frenzy, which pushed prices up even more, making that original lie look true. And this frenzy led to probably the single most absurd invention of this whole era, the ninja loan. I'm not kidding, that was the actual industry nickname. It stood for no income, no job, and no assets. You could literally walk into a bank with absolutely nothing and walk out with a mortgage for a $500,000 house. It's insane. Which brings us to the most logical question in the world. Why? Why on earth would a bank lend hundreds of thousands of dollars to someone they knew couldn't pay it back? I mean, it sounds like financial suicide, right? And the answer is the key to this whole disaster. They didn't care. Because the second that loan was signed, they turned around and sold it to someone else. They made their money on a quick fee, and the long-term risk of the loan going bad, well, that became somebody else's problem. This wasn't banking anymore. It was a game of hopicado with billions of dollars. And wait, it gets worse. Because, you see, all those terrible, risky loans had to go somewhere. They went to Wall Street, which had invented this financial blender, basically. A machine to chop them up, mix them all together, and disguise them as something safe. So here's how this money machine worked, and it's actually pretty simple when you break it down. Step 1. You bundle thousands of mortgages. Good ones, bad ones, those crazy ninja loans, all into one big package. Step 2. You slice that bundle up into new little investments. Step 3, and this is so important, you get a credit rating agency to stamp a big safety rating on it. And then, Step 4, you sell these slices to pension funds, to other countries, to anyone looking for a safe investment. This product was called a mortgage-backed security, or an MBS, and the sales pitch was brilliant. They'd say, look, you're not betting on just one person paying their mortgage, you're betting on thousands of people. It's diversified, it's super safe. Except it wasn't. And here is the great deception. These securities, these MBS things, they were getting AAA ratings. That's the highest possible score you can get. The same rating as US government bonds, the gold standard of safety. But what was really inside? They were ticking time bombs, stuffed full of all those toxic ninja loans. So how in the world did this happen? How did pure garbage get a gold star rating? This is the rotten core of the whole thing. The investors buying these products all over the world, they needed an honest rating. But the people paying the rating agencies to give that rating, that was the Wall Street banks that were creating the product in the first place. It's like asking a student to pay their teacher for a grade. What grade do you think they're going to get? This was a catastrophic conflict of interest just hiding there in plain sight. So let me get this straight. We have a lie everyone believes, fueled by free money, that created millions of terrible loans. Those loans were then blended together into what looked like safe investments, but were given fake safety ratings. You think that's as bad as it gets? You would be wrong. Wall Street then invented a way to make side bets on the whole thing collapsing. The financial product they used was called a credit default swap. But forget that jargon. The simplest way to think about it is this. It was like buying fire insurance on your neighbor's house. Yeah, you don't own the house, you have no skin in the game, but you could make a bet with an insurance company that it would burn down. And if it did, you'd get a massive payout. Wall Street was now making trillions of dollars in side bets on whether their own products would fail. And then, in 2007, the music stopped. The lie was finally exposed. Housing prices, it turns out, don't always go up. They started to fall, and the entire fragile, corrupt system that was built on top of that lie came crashing down. The fall was so fast and so brutal. First, homeowners with those really risky loans started defaulting. These were called subprime loans, which is just a fancy way to say they were given to people who were very likely to default. Then, in March of 2008, a major bank called Bear Stearns collapsed. Then came September 15th, and Lehman Brothers was gone. The very next day, AIG, the insurance company that sold all that fire insurance, went bankrupt because they owed trillions on bets they could never possibly pay. The entire global financial system just froze solid. So, what happened next? Well, this slide really says it all. The government stepped in with over $700 billion to bail out the very banks that caused the crisis. But for regular people, 8 million jobs gone. 4 million families lost their homes. It was two very, very different fates for the people who designed the disaster and the people who were its victims. So after all that, what do we actually learn? Honestly, it seems like not much. The banks that were too big to fail are now even bigger. The rating agencies, still in business. The basic incentives that reward taking on crazy risks are pretty much still in place. And almost no one at the top faced any real consequences. For millions of people, any faith that the system was fair was completely shattered. And that leaves us with this final, really unsettling question. The next crisis won't be about housing loans. It never looks the same way twice. But those underlying patterns, the easy money, the collective delusion, the conflicts of interest hiding in plain sight, they will be there. The only question is, now that we know the story, will we be smart enough to recognize it next time? If you enjoyed the video, don't forget to like and subscribe to the channel. Leave your opinion in the comments and tell me which topic you'd like me to talk about next. The comment with the most likes will be turned into a video.